Brandon, your office looks just like mine
I was actually a little curious why you got the same Hemlane background.
because I'm such a Hemlane supporter. That's why. Isn't everyone that wants to have like the best property management experience ever? I mean, come on
This is
now.
amazing. This is amazing. Well, welcome to everybody who is starting to filter on in. We are thrilled to have you. Really, really excited for the webinar today. We're going to kind of give maybe a 20-second buffer here before we kick off to be able to let everybody filter in. And I'm not sure why our Zoom background is defaulting Mr. Zach. Is it Lee Master? Is
You're one of the only people that's said that correctly. So it must be a Canadian thing, I guess. But yeah, that's correct.
Yeah, no, maybe it is a bit of the Canadian charm, or I don't know whether it just was very sticky. For those of you who are just popping in, Zach is we're gonna introduce Zach shortly here, but Zach and I met in at the Bigger Pockets conference in Cancun, and very quickly realized that Zach had married a Canadian. I am a Canadian, and so we very quickly began talking about the Canadian wilderness and good things like that. But today we're going to be digging in primarily on some business topics. But why don't I share my screen and we'll see if we can kick off and get going. So, for everybody here who's in attendance, we're thrilled that you're here. We are going to be talking a little bit about how to buy an investment property with some brand new wonderful partners that we're super excited about. Zach, how to buy an investment property with 5% down and 10K cash back. It's just a really cool offer. And for those of you who I haven't met, I am on the team at Hemlane. We've made a funny note that I am up in Canada, but we're excited to be able to include this conversation as part of our webinar series. Um, to give you guys a little bit of context, we don't see a lot of great opportunities for our audience that we are as excited about as what Rent to Retirement is doing. So, for those of you who are familiar with us at Hemlane, we really want to help you turn all of your rentals into hands-free, scalable investment properties. We want you to be able to have as much control or as little control as you want. If you're like, no, I will get them off my plate, Hemlane can take them totally off your plate. And then alternatively, on the other end of things, if you're like, no, 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 I want to be able to maintain control. I want to be able to control how our properties are managed. We have a whole suite that allows you on a sliding scale very much to get as much support or as little support as you want. So when we were meeting Rent to Retirement, they had such great alignment of a pile of different investors that were like, we got to connect with you and we got to have you on this. So with that said, Zach, I am super thrilled that you're here. I'm so excited to have you on our webinar. I'm so excited to be able to continue to deepen our friendship and the partner intro to who you are and your background, and then we'll dig in on Rent to Retirement and why we're excited about the partnership.
Yeah, that's awesome. Thank you so much, Brandon. Appreciate the very nice introduction. And to all the Hemlane audience, thanks for having us on. I think we're going to talk about some stuff that's going to blow your mind today that is just going to get you really excited and engaged about, investing, things you can do before the end of the year into next year, how you can take advantage of the best investment opportunities across the country and leverage what you're already doing with Hemlane to really expedite your investing goals and do some really cool things. So I'm excited, very excited to be here. As Brandon very nicely introduced me, my name is Zach Leemaster. I'm the founder and owner of Rent to Retirement. We are the nation's leading turnkey and build to rent company. We'll talk a little bit more about what we do, but my background, guys, I have nothing to do with real estate. I'm full-time real estate running this business now, but I have a background in healthcare. My wife and I are optometrists. As Brandon mentioned, my wife is from Canada. I'm here in the US. We live in Colorado now. But I started investing in real estate when I was a captain in the Air Force immediately following school. I was on scholarship. So I just bought my first house and house hacked it, right? Lived in half, rented out the other half. And that's where my property management experience started, and quickly found, I wish Hemlane existed back then, but quickly found that, management is a tough thing to do. And the more tools and resources you have can help you be really successful. But we continued investing in all sorts of assets we started investing probably about 15 years ago at this point. And there's a pivotal moment that really changed the trajectory of our lives. And that's when we started to invest out of state, specifically being conscious about where the best investment opportunities were,
Mm,
not just only focusing on our own backyard. And once we started to do that, everyone, we became very successful investors that allowed us to scale our portfolio, retire us both from our active career paths in healthcare, and build this business, Rent Retirement, which essentially helps people do the same thing that we did, which is identify the best
mm,
markets throughout the country to invest in and build scalable portfolios. And we coach people how to do that, and we offer the inventory to them. Let's go ahead and hit next slide there, Brandon, if you don't mind, sir.
mm. Not at all, man.
All right, and we can even go into the next one. So why would we invest in residential real estate, right? I mean, most of you, if you do, and put it in the chat box, guys, if it's open. I'm very curious to hear where you're at, where you're tuning in from, where you're currently investing, and any goals you have. It's really important for me to understand, like, the audience and what your background is, your experience level, and what you're looking to do next. So put those things in: where you're from, where you're currently investing, and any other future goals. And we will do Q&A at the end. I know that we'll, if you have questions as you're going through stuff, I'm going to run through this quickly to make efficient use of your time. But throw in some questions as I'm going through this. Why do we like residential real estate, guys? I've invested in it all underneath the sun, like everything: commercial retail, commercial industrial, REITs, syndications, single family, multifamily. We do a lot of high-end short-term rentals now, but residential real estate, your residential asset is going to be your safest, most predictable asset, especially single family. Why? Because it's a human necessity. People need a place to live, right? And when you're serving that need, especially when you're investing in areas that have an undersupply of housing, that's your most stable asset class. People always need a place to live. Single family, especially, you have better loan terms, you have better appreciation than other asset classes. It's just really predictable. So our company, we focus on brand new construction, residential properties in the best markets throughout the country. Let's keep cruising, Brandon.
You got it, man.
So it's important to build a diversified portfolio. I told you early on that the most important thing I did, the most crucial thing I did over the past 15 years of investing, and guys, we built a very large portfolio. We run an active business, but we have just my wife and I now, we have an 8-figure portfolio, rental portfolio, high-figure portfolio that cash flows over 7 figures annually. And I don't say that to gloat. What I'm saying is that, we never thought that we were going to get to that point. That was never the goal for us, but we were able to scale that, being strategic investors, focusing on areas that have the best returns and consistently building a diversified portfolio across those markets. That was the single most crucial thing I did in my investing career, is be conscious about, hey, maybe, and I started local, that's okay, but being focused on where are the best markets to invest on why do we want to invest in those areas. That allows you to have the best returns and expedite your goals. Building a diversified
Mm,
portfolio, not only across different locations, but different asset classes, is really important to help you be successful, right? And that's our goal, is to help you access the best markets throughout the country, where our company has identified and ran all the metrics. And we'll run through some examples here in a little bit and show you exact numbers and locations. But we scour the market to find, at Rent Retirement, the best locations throughout the country based on a whole list of criteria. And then we buy, or we build or renovate properties in those areas, lease and manage them, and allow our
mm,
investors to come in and purchase those, where everything is handled for them. Or if you're already operating Hemlane, you can also self-manage and be the central place for management across all these locations. But this is very much a turnkey approach, where you get access to the
mm.
best locations throughout the US without having to build your own team from the ground up and try to look about, what is the best place to invest. Let's go next slide, please. So this is, and I probably could spend all day talking about tax incentives, and we'll cover kind of a plethora of different things today, just important topics that I think are important and relative to be conscious about, and things that we help our investors with. But there's just some really cool things about investing in residential real estate. For those of you who aren't paying close attention to the tax benefits, and Brandon, sorry, this is mainly US bet investors. You can be Canadian and invest in the US, because then you're paying US taxes. But especially those of us
Mhm.
who live full time in the US and pay, income tax here, taxes is the biggest expense we're all going to have, right? And the easiest way to give yourself a huge, tremendous raise is to pay less taxes, right? And the real estate is the most tax efficient vehicle out there, no questions asked. One thing that we help our investors do is be a tax efficient investor. And I know I put on a lot of details. There's a lot of details on this page here. Don't worry so much, about memorizing this and focusing on this. This is big picture. Like, if you're interested in some of the things I'm reviewing and talking about today, Brandon will post a link in the chat box on where you can set up a
Mhm.
consultation with our team, where we can go through and talk about some of the markets we're investing in, talk about some of the tax things, and help educate you on what we do and answer your questions. So certainly set up a time with us if you're interested. But one thing we do is help investors be tax efficient investors. The specific strategy that I follow through is doing what we call cost segregation and accelerated depreciation. And this can be done in one of two ways. It can either be done as a real estate professional, if you're kind of full-time real estate, and there's metrics with that, or if you're operating a short-term rental, as in you're self-managing it. Actually, speaking with the owner of Hemlane and Dana, I'm utilizing the self-management tool with Hemlane, and that actually allows you to qualify easier for real estate professional status to do some of these things I'm talking about. But basically, if you buy a $300,000 property and you're accelerating, everyone takes normal depreciation. If you accelerate a portion of that in year one, because you're a real estate professional using Hemlane, self-managing, things like that, you can take immense tax benefits this year. And these are kind of general numbers, but these are real numbers based on what you would expect. If you're buying a $300,000 house, usually you can accelerate about 30% year one. That would be a $90,000 tax deduction. That's at 100% bonus depreciation. So you can make big moves. My point is here, guys, is that being a tax efficient investor is going to help you scale and grow your portfolio significantly and help you achieve your goals quicker than maybe not being conscious of these things. But real estate, super tax efficient vehicle. We help people be tax efficient in building their portfolio. Let's keep going here, Brandon. All right, creative financing. This is going to blow your guys' mind, and this is kind of into the title here. We can go ahead and keep moving. This is where we talk about buying properties with 5% down, and that was some of the information or subject line that Hemlane put out. That's not just clickbait. This is real. These are real world scenarios where you can buy new construction A-class assets with 5% down, and we're not talking about living in the house. This is a portfolio loan, and I'll stick with me, guys, because I'll make it even better for you and show you how you can actually buy a property with zero money down, combining a few different things. But one thing we do is not only do we scour the nation for the best property opportunities to invest in, but also the best lending opportunities. In most cases, in our company at Rent to Retirement, we have hundreds of thousands of investors, and we're constantly, as a community, doing a lot of transactional volume across the country. So we're able to go to the lenders that will actually create lending products specifically for our community, or that we can kind of tailor towards the investor's needs. This is one example of that. We have local credit unions in most markets that we work in, not all, where you can buy up to 5 investment properties with as little as 5% down. Again, portfolio
Mm.
loan, they hold that loan in-house, and meaning the lender holds it in-house, they underwrite it, they hold it with the lender, and this just allows you to be a strategic investor, right? This is a 30-year amortized loan. The loan term is due in 10 years. So in 10 years, you either got to pay it off or refinance it. That's a very long time if people are familiar with ARMs. But
Mm.
think about that for a moment. If you're putting 20, most people think, oh, with a single family, got to put 20% down, multifamily, 25% down to buy an investment property. And that's all they know. But think
Mm.
about this. If you had 20% down, you could buy 4 times the houses using 5% down to own a larger portfolio that's going to allow you to own more real estate over time, which is going to allow you to have more tax benefits, multiple streams of income, more appreciation over time. It's going to allow you to scale quicker. And this is a really interesting way that we can help people build a portfolio
Mm.
much quicker than just having to save up that 20% down payment every single time, right? Because cash is the
Yeah.
capital's most limiting factor for everybody, right? Every
Well,
time. Go ahead, Brandon.
and Zach, I was just going to say the one thing that really clicked with me, and part of what I think is so interesting about what you guys do, I would encourage everybody who's listening. Rent to retirement is unique in the way that they model out all of the expenses, the costs, they break down everything in such a thorough way for all of these different markets that you can be very, very informed in terms of what is the best plan, what's the best strategy for your investments. And that was when we met, and I sat beside Scott on your team, and I was like, walk me through it, how does this work? And he just started showing the breakdown of the thoughtfulness of how you guys allow investors to enter markets. And you can say, if you've got X amount, here is how you can turn that into 1 investment property or 4. And for me, as somebody who owns, I'm exactly in the scenario where you and your wife were, where you were house hacking. You've got the suite in the basement. You've done it again. I've got a few rental properties now and things. But the anxiety that I experience is, well, how do I know I'm making the best, like the most effective choice with my investment properties, in terms of how is it that I how is it that I continue to find the best deal outside of, we're in Calgary. Calgary is a city of 1.6 million. It is expensive. It is not the best place if you're trying to be able to do this. And so, of course, I was even looking south of the border because I spend piles of time in the States. And, I work for an American company. Um, I think what's fascinating, and I just want to impress on the people as we're talking about this, that even for out of country investors, this is mind blowing. So for me as a Canadian, I'm like, holy cow, some of it's not available to me. And I'm like drooling at it. And so I just, that was some of the things that I was excited about. And, we can see a couple questions popping in. I've actually got a few in the Q&A for you for later on. I just wanted to mention to people, please keep tucking in the questions so that we can take advantage of Zach's time here. But let's let I just wanted to double tap on that, Zach. I was like, this
I
is
appreciate
cool.
that. Yeah,
Yeah,
and
this is
that's
so
our
cool.
goal, Brandon, is
Yeah.
to, our motto is to make the best investment opportunities across the country accessible to everyone,
Mm,
and have all the teams and systems you need to be a successful investor. And Hemlane is an intricate part of that, right? So you can manage your properties from a distance and have all the systems that you need and still scale your portfolio. So you have the management piece, but there's also the piece of, yes, to your point, what is the most strategic place for me to invest in? What is the best
hmm
return on my investment, right? Once you start thinking outside of the box, and Hemlane, guys, a resource like Hemlane allows you to do that. It allows you to expand your investing and your mindset outside of just your local market, right? And that's so important. Again, that's the single most important thing that allowed us to be successful investors, is strategically start investing where we found the best returns and the properties that were most conducive to our goals. So yeah, let's keep cruising, Brandon, if you don't mind. And
So
next
cool,
slide.
man.
Um, so in this one, I won't belabor the point just for time purposes. I know we scheduled roughly 30, 40 minutes, and I'll just try to, I want to save some time for Q&A. But again, guys, you get it. If you're putting less money down on a property, the cash flow may not be as high because you have a higher loan amount, right? It has higher LTV and higher loan costs, but it's about being a strategic investor, allowing you to scale your portfolio. This is just one example of multiple loan options that we have available. So let's keep going here. Um,
hmm
New construction. Our company, about 80% of what we do is build to rent, new construction. So turnkey, guys, turnkey is a buzzword out there. A lot of people hear turnkey, they don't really know what it means. They've heard, or maybe they've even dealt with turnkey. Our goal is to first research the best markets throughout the country that have landlord-friendly legislation, low taxes, future population, economic growth, diversity of industries. We want to be below the median house price point in the U.S., which is about 400K. We want to be below that because that's how we know we're going to have the most upside. We're going to have the highest demographic of tenants and home buyers at the end of the day. But we focus on new construction properties or fully renovated properties, that are in the markets that fit our goals, where we have all the teams and systems in place. Again, we have local property managers if you want to just be completely hands off and have them do it, or you can easily use Hemlane to manage this. And guys, using a product like Hemlane with new construction, that's the best way to go. I mean, you have very little maintenance. You have builder warranties on everything. You're attracting quality tenants. New construction, we're building them in areas that have high demand. We can one interesting thing, I think, this will be a good point to talk about this. We have,
mm
how our company works. We do one of two things. We are a builder and we build our own inventory, but that's a small portion of what we do. The bigger piece that we do is we are a buying community in a marketplace that is buying, hundreds and thousands of houses every single year across the country. So our community is able to go to national home builders in the US, and these are award-winning home builders, Toll Brothers, Lennar, DR Horton, LGI, that build all across the country. And we're able to negotiate wholesale type of pricing from these builders, just like an institutional buyer would, right? Just like a Blackstone. If Blackstone's coming in, they're buying 500 properties, they're getting wholesale type of pricing. They're not
mm
paying retail value, because our community as a whole is able to buy volumes of homes at the same time. We're able to go to these builders and actually negotiate wholesale type of pricing that we pass those savings on to you as the individual investor that you would not have access to on your own because you're not buying 500 plus homes from them, right? So there's
mm
power in numbers, and being part of our community is where things get really exciting, because not only do you access the best markets throughout the country, with all the teams and systems in place you need to be successful, but you also have unique buying opportunities that you couldn't access on your own. And I did go through some numbers here. I don't know exactly where they're at, but I'll just to give you an example. Usually on a new construction A-class house that has positive cash flow, you can get anywhere between a 6 to 12% in what we call incentive. And the incentive allows you, and we're the only company out there doing this, you guys, but this incentive is something you as the investor gets to use however you want.
Mm.
It could be a price reduction. It could be cash back at close. You could use those to buy down rates into the threes, which the Fed is never going to get back to the threes, in my opinion, for mortgages, for investment properties. But there's a lot of different things you can do with it. So, for example, in a $300,000 house, if you had a 10% incentive on that, you can use that however you want. 10% of 300K is $30,000. You can take that as a price reduction. So you have immediate equity in the house at $30,000. So you're buying the house at 270, where they're still selling at retail at 300. That allows you to be a more strategic investor, to cash flow more because you have a lower loan. It allows you to have immediate equity to cash out, refinance, or sell in the future with more equity. Or where it gets really exciting, you don't have to use that as pure equity. That's real money. You can actually take it as cash back at closing. So you could buy a $300,000
Mm.
property if you're putting 20% down, which is 60K, and you get immediately $30,000, 10% of that back. And all of a sudden you're into an A-class asset that has immediate equity and is cash flowing and it's new construction with half the money down. Your ROI is going to skyrocket. That's going to allow you to buy more real estate. I'm going to take this one step further. Think about this. We just talked about a 5%
Mm.
down loan, right? If you buy a property, we're getting 10% back and you're putting 5% down, that 10% will cover your 5% down payment. So you're zero money into the deal and you're getting money back in your pocket at closing. That's a strategy you can use. You can literally buy these properties. If you qualify for the 5% down and you buy inventory where we have the kickback option, then you can buy properties with zero money down and you can stretch your capital further. These are the type of strategies that are mind blowing that help people
Yeah, it's
scale their
unbelievable.
portfolio. So
Yeah,
I
it's
know
unbelievable, Zach. It's some of those things that were kind of this like aha moment where it's like fascinating. You can actually get 5% down, you can buy it across the country. And I mean, we're going to touch on this in a bit. The question is always how do you manage these properties, of course. I mean, most of the people here from the Hemlane network, they know that that's, you know, what we do. We'll touch on that in a little bit. That's what we're excited about with this partnership is that for people who are already using Hemlane, here is a way that you can expand your assets. And with Hemlane, you just click plus one. You know, you just add another property under management. And now you've got a familiar way of managing it. You can increase the amount of support to whatever it is that you want. And with incentives like this, it's a no-brainer. Like some of it is so fascinating. And again, like as a Canadian, I'm like chomping at the bit sometimes. I'm like, man, I'm trying to figure out like how do I actually make this happen down there? And some of it isn't as much of an option to me, but it's just so cool. I love the angle with the bulk buying that you guys have figured out, Zach. And I already see one question popping in here that I'll save for towards the end here, but it's just so cool.
appreciate that and thank you. I mean, yes, I mean this is something, we've been in business for almost a decade now. Just growing
Mm.
and identifying the best locations across the country and building the teams and the inventory there so investors can be strategic investors where not only do they get to tap into a market that they may be unfamiliar with or may seem daunting to them to enter a market they just don't know anything about. We're making that accessible to them as well as buying opportunities to allow them to really be strategic investors. And that's what it's all about, right? Is being part of
Mm.
our community, leveraging the partnership and the resources like Hemlane to have your system set up so you can scale your portfolio. At the end of the day, that's the goal, right? Scalability. That's the name of the game. So
Absolutely.
this is getting, I think we keep going here. This is like just an
Sure.
idea of $1 million. If you invested $1 million, you could get, well, actually, let's go back real quick. Just on the cost seg stuff. Let's say you buy $1 million worth of real estate. If you're putting $200,000 down, 20%, you roughly, if you're doing some accelerated depreciation stuff I'm talking about, you could get $300,000 of tax deduction on that $1 million. Well, if you bought that $1 million worth of real estate with 5% down and it had those kickbacks, like this is just an example of how you could buy a large portfolio, say $1 million worth of real estate with zero money down and create a $300,000 tax deduction in year one, potentially. So those are that. I may have lost some people there. Those are the kind of strategies we work with people on. All right, let's keep going here. I know we're
So
running
cool.
low on time. I'm gonna, if you're okay with it, Brandon, you can tell me to stop at any point, but
Sure, buddy.
let's just keep cruising through because I want to get to the
Sure.
Q&A. I know we're at the, turnkey. We talked about what is
Turnkey.
turnkey, right? We talked about,
Mm-hmm.
where does turnkey, I'll say this real quick. Where does turnkey make sense for people? Turnkey is a great way. Again, it's a buzzword. So I'm specifically talking about like what we mean when we turnkey, which is a market that has positive returns and positive investment outlook where the houses are newly built or fully renovated, leased. and managed either by, Hemlane or our local teams, whatever the case is. You have access to that inventory that is pretty much turnkey in those areas. Turnkey could be a really good option if you're a brand new investor and you
Hmm.
want some hand holding as you get started. You want to avoid the most common pitfalls and mistakes. You want to do it on your own. If you're a first time investor out of state, you're looking to invest out of state, great option. If you are a busy professional and you want to limit your
Hmm.
time involved in properties, that's an option. If you are a very experienced investor, I saw some people in the Q&A, 20, 30 doors. Or in the chat box, like, this is a way to scale your portfolio. Like myself, I'm always rushing to buy more properties every single year for tax benefits. This is an easy way to buy more properties and diversify your portfolio, allowing you to focus your time and energy on, your job or your family or your real estate that you're already doing. This is just one example of a typical Midwest. This is a renovated house, this is a new construction. This just gives you an example. There are house price points in the Midwest, guys, where you can buy a pretty decent house for 130,000 bucks. It's just going to be your bread and butter blue collar type housing. We have some of this stuff in the Midwestern markets like Missouri, Indiana, Ohio. Let's keep going, Brandon. This produces a 15% cash on cash ROI. We also have new construction that's mainly in the Southeast in growth markets. Let's keep cruising here.
So cool.
Um, our goal, like our process, you guys, is that we don't charge investors anything because we make our money through building and selling houses. That's our main revenue source, right? And so we don't need to charge our investors anything. Our goal, the first thing you do if you're interested to learn more about, rent to retirement, investing out of state, some of these loan options that we talk about, market data, whatever the case is to set up a consultation with our team. I think Brandon has a link that he'll throw in the chat box to schedule
Absolutely.
consultation with our team. And we just talk about your goals and strategy, right? Answer your questions, help you learn about the different markets, what the tax benefits are, what the best lending options are based on your situation. And then you go through the steps, right? It's a normal buying process. You put a property under contract. Once you've worked with us, I figured out what market, what loan you're going to use, what property you want to buy, put it under contract, go through normal due diligence, and then close on it. And then, set it up with either Hemlane, which is super efficient to do, or however you're going to manage that property. And then we help you build a strategy over time. Our investment strategists work with you individually to help you build a strategy to learn, how to scale over time. I think this one's you,
Totally.
Brandon.
Totally. So let me just give some of you guys a little bit of a touch point. I'm not gonna belabor the point. Hemlane offers full service property management to anybody across the United States. If it's the case that you're looking to be able to turn your self managed properties into something more hands free with full transparency into what it is that's happening at those properties, we have 24-hour repair coordination, the ability to manage your rentals from anywhere, and our tech tools that we have, like automated rent collection, accounting, things like that, allow you to just get all the money from anywhere that you're currently operating. So with that, I'm not gonna, like I said, I'm not gonna belabor the point too much. I want to get to some Q&A because we've got some amazing questions that are starting to come in. The first question that came in was specifically just some of these cash flow questions. There's no way that this thing cash flows with taxes and insurance as 1,100 bucks a month with today's rate. Zach, do you mind telling us a little bit about what are you seeing in terms of cash flow ranges and how can people optimize that?
Certainly. Yeah. And Bobby, I don't know exactly the numbers you're referencing, but I know we had the property example. Our inventory is publicly available on our site, guys. We run a pro forma analysis. We show you all the tax, insurance we take out, future vacancy, maintenance, things like that. We don't include CapEx on new construction because you probably shouldn't have CapEx on a brand new constructed house. But we're seeing anywhere on average between 6 to 12% cash on cash returns if you are using conventional leverage, right? But look, it's not one size fits all. There's a lot of different creative things you can do to increase or possibly decrease cash flow, but also decrease your amount of money into the deal, right? Our pro formas, we're always running with a typical 30-year conventional loan, putting 20 to 25% down. Rates, if you're not buying rates down, probably six and a quarter. But if you're paying attention to what I talked about, if you are buying a $300,000 property and you're getting $30,000 to do whatever you want with, you can buy your rates down into the threes. So you could increase cash flow dramatically. Now, would I do that? Maybe not. I don't know if that's the best utilization. I think actually getting money back at closing is probably makes the most strategic sense. But in theory, you can buy rates down into the threes, which would skyrocket your cash flow
Mm,
into that
that's
15 to
awesome.
18% cash on cash. So it's all about understanding what is the right market, what is the right lending, matching all those things together.
Awesome. Zach, second question came in here. What markets have you found most success in? Like, what are your guys' bread and butter in terms of what you recommend for people?
Well, there's two main regional areas that we focus on, Brandon, and this would be Midwest. So this is Ohio, Indiana, Missouri. These are your, 120 to $180,000 houses, mostly renovated, some new construction at the $200,000 price point. Like these are your bread and butter cash flow properties in the Midwest that have like slow and steady appreciation, not volatile markets, lower price points, so lower barrier of entry, just quality, middle America. The area that's about 30% of
So
what we do.
interesting.
Where we focus more on is growth markets. This would be more southeast, and this is all new construction. And these price points can be anywhere from 250 to 400,000, single family, some small multifamily as well, 2 to 4 units. These are areas like Texas, Alabama, Georgia, Florida, Carolinas. These are areas that are seeing more growth in rents over time, in home appreciation, because this is a lot. There's a big population shift in the U.S. down to the Sun Belt, to the southeast, and there's just a significant undersupply of housing there. We have a supply deficit of 7.5 million homes in the U.S. We have an affordability crisis here, worse than it's ever been. So
Wild.
that's why we focus on that, $200,000 to $300,000 range, definitely below that $400,000 median price point. But those are bread and butter quality homes in the southeast that are growth markets where, yes, they're a little bit more pricey. They're new construction. Your cash flow may be 5 to 8% cash on cash year one, but they're probably going to have better performance long term with better appreciation, less maintenance, less tenant turnover, and higher rent growth. So those are the markets we try to focus on.
Yeah, it's so cool. Well, I can see more questions popping in here. I've dropped the link in the chat for people who are wanting to be able to dig in a little further. I'm just going to kind of pop forward a touch further. We may have a little bit of time to go over with some questions, so feel free to stick around. We'll see if we can grab another 5-10 minutes of Zach's time. I'm happy to keep digging in deeper, but I wanted to point anybody who's maybe tight for time in the right direction. So Hemlane, there's a link in the chat to be able to book a demo with us if you're needing any help with managing your properties or trying to get your properties that you're managing as hands-free as possible. You can connect with us. And I added the link in the chat as well for booking a consult with the rent to retirement team, where you can dig in, answer all the questions that you want, get all the questions asked that you've got, and then we can dig in, fully thoroughly with the rent to retirement team to be able to see what's the strategy that's going to be working best for you. Now, with that, I want to thank everybody for joining. We are going to continue digging in on some questions here. Zach, do you have a few more minutes? If we keep
Yeah,
digging in, we just have awesome questions coming in.
I certainly do, Brandon. And these are good questions.
Beauty. Okay. Well, I wanted to quickly get us to that point, but let's keep chatting. I can see a question that came in here. And some of these are, you can tell that we've got some very serious investors who are in here. They're like saying, hey, Zach, can you explain a little more of how to take advantage of the bonus depreciation if the investor is out of state and outsources partial property management? Any quick thoughts on that?
Yeah, and this is a complicated topic. I could talk all day on this. So first disclaimer, I'm not an attorney or CPA, but we have very good ones that we also provide access to our community, that are happy to work with them. Bonus depreciation is probably that, and 1031 exchanges is probably the single most beneficial thing for real estate investors on the tax side. But again, for those of you who are unfamiliar with that, everyone takes normal depreciation on a house, right? You're required to actually for simple math, excuse me, on say $100,000 house. On residential, you depreciate that over 27 and a half years. And so in every year, that means just normal. Everyone does this. Even if this is your only house, you're taking it's like a $3,300 deduction passively against that offsets your cash flow on the property. That's dramatic, by the way. That's a huge benefit, just depreciation alone, because that means that's wiping out your taxes on your rental income. That's why we call it tax-free income. If you think about it, if you had $100,000 annually of passive income from your rentals, and depreciation and your mortgage write-off and all these things are like offsetting your taxes on it, and it's tax-free, that could be the equivalent of like $160,000, $180,000 of earned income, depending on where you live,
Mm.
right? So that's your actual take-home net. That's really important. So how bonus depreciation works is that you can have an engineer get a study, it's cost segregation study. You can accelerate the depreciation on the home to take a portion of it in year one. The reasoning is because not everything in
Mm.
the house is going to last 27 and a half years. And so part of this is part of the 2017 Tax Act, allows you to take a portion in year one. Now, to be able to do that, anyone can do that, by the way. Anyone can do that. Where it gets really exciting, though, is if you where you take that, that's a passive loss. Depreciation normally is passive loss. If you take that against your active income, against all sources, this means you can have a really dramatic impact on your income, right? So if you're earning $100,000, $200,000 a year, your W-2 employment, and you have a huge, $50,000 write-off from real estate, that counts against your active income. That's huge, right? That limits the
Mm,
amount of tax you have to pay. General math, on a $100,000 house, you can take about 30 to 40% year one, depending on where your study comes in at. So that could be a $30 to $40,000 tax deduction, off of your actively earned income. To qualify for that,
mm.
to do that, you need to meet the amount of hours needed for real estate professional status, which again, in Hemlane, you're technically your own self-manager. You are self-managing your properties. And so that allows you to qualify for real estate professional status much easier than someone who's trying to outsource property management, or if you're like actively short-term managing your property, there's also, a way you can do that. So
That's
that's
so
deep, you
interesting.
guys, but it's an
That's deep.
extremely powerful tool. Our goal, we run a successful business. Our goal every single year is to buy enough real estate to offset our taxes to zero every single year. Actually, we create a negative loss that carries forward into next year every single year. So that means our net income is truly our net income. We do not pay any taxes on that. And that's a significant amount of money that we'd otherwise give to Uncle Sam that then we use to reinvest into more real estate to, guess what? Have more tax benefits, right? And then you get the snowball effect and the more income. So it's like, guys, that's how you create financial independence through real estate. And that's how you create generational wealth, is by, being a tax conscious investor and investing in the best locations throughout the country where you can build a diversified, sustainable portfolio. Brandon,
So
kick me off my soapbox because I could go all day.
Zach, that is that. Anyhow, I'm like, for me, I'm like, that is mind blown. What you're telling me is that me deciding to get my eyes laser eye surgery zapped versus going and relying on an optometrist who is getting a W-2. That you're like, you have no opposition to that. This model has worked out pretty well for you.
Brandon gave me a little joke there because I was an optometrist in the previous life. So, but that is a good analogy. I like that. No one's used that yet.
Yeah, I dig that. So, well, and the one question that I had that I think a little lighter, little simpler, a little less strategic. Getting started with rent to retirement, is there membership fees? What's the catch? What's the catch? Is there some monthly fee or something that people need, or is it just like, hey, get started, buy a property, off you go? What's kind of the path to value that people can expect?
Certainly, we make our money from building and selling houses, right? So we can offer you a steeply discounted new construction property, again, where you're buying property significantly below market value, or you get cash back in your pocket. That's because of it's a volume play, right? It's economies of scale
Mm,
working with our company. So we make our money on building and selling homes. We don't charge investors anything. You don't have to be a member to invest with us. We do have our academy, which is an educational curriculum that is a paid course, but the benefit is they're like, if you invest with us, you get your membership paid back to you and it's refunded. So that's more of a resource just to help people get started that need a little bit more guidance and hands-on approach. But yeah, anyone can invest with us. Our goal is to help you build a strategy that will help you reach your goals quicker maybe than you would on your own. Expand your portfolio.
oh man, that's phenomenal. Well, you know what? I can see so many more questions rolling in here. What I'll do is I will absolutely commit to sending out this recording. I'm just gonna back up here just a bit. Again, if you guys are curious about what it is that's going on, we are thrilled to be partnering with Rent to Retirement. We think that it's a total home run for any of our customers. And you'll notice when you're actually doing the cost analysis, Zach and team are now beginning to see how much more the cost advantage is if you're using a tool like Hemlane, where we allow you to bolt on many properties anywhere across the states to be able to get those managed and take some of the stress out of this process for you. But with that said, the link again for connecting with Zach and team is in the chat. I'm going to drop it in there again right now, just so that you guys have got a really quick way. Guys, this is a free meeting. I mean, if nothing else, for the rest of you, there is no fee for the consult. Karen, Yin, thank you so much all for your questions. I highly recommend hop on a call with these guys. It is, again, they're not going to start billing you. They're making money off of selling the properties themselves when the strategy is sound and when this makes sense for you. You can see why it is that we're thrilled in terms of being able to partner with a company that's such a hand in glove fit with Hemlane. So with that, wanted to thank you all so much for being part of this. We are going to send out the links. We're going to send out the recording of this to everybody here who's attended, and just really thrilled to be able to yeah, just continue to find clever ways to help you guys scale your rental properties, manage your rental properties. And as you can see, we haven't even scratched the surface with how much Zach and team strategize and think thoroughly about being able to decentralize your investment properties across the United States. Zach, thank you for your time. Holy cow. I'm like just itching at being like, why is this not 3 hours long? Why did we do this so short? But thank you so much for your time.
Thanks for having me, Brandon, and everyone that joined in. Yeah, our team is ready to answer additional questions you have, talk about the different markets, lending opportunities. We're here to add value and education however we can. But thank you for your time today.
Awesome. Okay, take care, everyone. Thanks so much, and we'll be in touch.